All right, today we're diving into something pretty mind-blowing, the ancient blueprint for modern banking.
So when you think about banking, loans, interest rates, all that financial regulation, your mind probably jumps to Wall Street, right? Or maybe the City of London. But what if I told you that the very core of that system was already up and running and thriving thousands of years ago?
Yep, you heard that right. Ancient India wasn't just about grand empires and deep philosophy. It had this incredibly well-organized financial system that was, quite literally, the engine powering its entire economy. So let's dig in and see just how they pulled it off.
Okay, here's our game plan for this explainer. First, we'll set the scene and look at the financial world back then, including the kind of money they were using. Then, we'll get into the real heart of it, lending, loans, and interest. After that, we'll check out some surprisingly modern financial tool they had, meet the people who kept everything on the straight and narrow, and finally, we'll connect all the dots to the banking world we know today. Sound good? Let's go. All right, first things first. Let's step back in time and get a feel for this ancient financial world. Who were the main players and what exactly were they doing?
So, you might be wondering, how on earth do we know any of this? Well, it's definitely not guesswork. This stuff is laid out in incredible detail in ancient texts. We're talking about works like the Arthashastra, a famous guide to running a state and an economy, plus all sorts of legal texts and even physical inscriptions and records. These sources give us a remarkably clear picture.
And the bankers of the day? The big players were super wealthy merchants and these really powerful guilds called Shrenis. And get this, their job description is going to sound very familiar. They accepted deposits, they gave out loans, and they financed big trade expeditions. Basically, they were banks.
Okay, so you can't have banking without the most basic building block, right? Money. Let's talk about what they were using for currency.
Sure, people still bartered, but ancient India went way beyond that. They developed a really sophisticated system of currency. We're talking gold coins, silver coins, copper coins, and even these things called punch-marked coins, which are some of the earliest forms of money in the world. Having this standardized currency was a total game changer. It made huge trade deals possible and really leveled up the economy.
Okay, so they've got the cash. Now for the exciting part. Let's get into the engine room of their economy. Lending, loans, and interest. This is where the magic happens.
So who was getting these loans? Well, pretty much anyone who needed capital to get things done. You had farmers who needed it for seeds and equipment. You had merchants funding their big trade ventures. Craftsmen needed it for materials and workshops. Heck, even regular folks could get loans for personal stuff. It just goes to show you how credit was totally woven into the fabric of their society.
And this is where things get really impressive. They didn't just have one-size-fits-all interest rates. No way. They basically pioneered the idea of risk-based lending. Think about it. A loan to a local farmer, that's pretty low risk, so the interest rate was lower. A loan for a big commercial trade route, a bit riskier, so a higher rate. And a loan to fund a sea voyage with all the risks of shipwrecks and pirates, that was high risk, so it had the highest interest rate. This is exactly how banks assess risk and set loan prices today. It's incredible.
But hold on, this wasn't some kind of free-for-all Wild West of lending. Not at all. The system had rules, and they were really important. Those ancient texts, like the Arthashastra, actually laid out regulations. They even set caps on interest rates, like a 15% annual maximum for a standard loan to make sure lenders couldn't just take advantage of people. You could almost say the system had a moral compass.
And it didn't stop at simple loans. They went even further, developing financial tools that showed a mind-boggling level of sophistication for the time. For example, deposit banking. It was a totally normal thing. People would take their valuable coins, their gold, whatever they had, and deposit it with a trusted guild for safekeeping. That tells you there was a huge amount of public trust in these institutions, just like the trust we're supposed to have on our banks today.
And these major deals weren't sealed with just a handshake. No, they used formal written loan agreements. These documents were legal proof of the deal, and they were basically the ancient world's version of things like bills of exchange or promissory notes. This is what allowed merchants to do business safely across massive distances.
So, with all this complexity, who is keeping it all together? Who were the regulators? Let's take a look at the institutions that built all this trust.
The big one here was the Shreni, the guild. But when I say guild, don't just picture a bunch of craftsmen meeting up. These things were financial powerhouses. They functioned a lot like our modern cooperative banks, managing the group's money and financing all kinds of projects for their members.
And they had this really smart separation of duties. On one side, you had the guilds. They were the financial engine, handling the deposits, the loans, the financing. And on the other side, you had the state, acting as the referee. Their job was to make sure everything was fair, to standardize weights and measures, and to come down hard on fraud. This created a really stable and predictable playing field for everyone.
Okay, let's bring it all home. What was the real-world impact of all this? And more importantly, why should we care about this ancient history today?
Well, the impact was huge. Absolutely massive. This whole financial system wasn't just some interesting little detail of history. It was the main engine driving their economic growth. It pumped capital into everything, from the smallest local farm all the way up to huge international trade empires. It fueled incredible prosperity.
And this is the big takeaway. Just look at the parallels between then and now. Risk-based interest rates? Check. Financial regulation? Check. Using credit to finance projects? Check. They even had ethical principles baked in, what they called dharma, which was all about fair and moral conduct in business. I mean, that's a direct line to today's conversations about ethical banking. It really is an ancient blueprint for the world we live in.
It really makes you think, doesn't it? If the foundations of something as complex as modern banking are this ancient, what other parts of our world have roots that go back way further than we realize? What else have we forgotten? Something to chew on. Thanks for joining me for this one.